Did you ever have to plan your finances to pay for a holiday or to buy a new car? If so, then you have dealt with budgeting. And just like personal budgeting, companies have to plan ahead as well. In this lesson, we'll have a look at what goes into preparing budgets for businesses and how can you influence the budget for your department. So why bother with a budget? Well, clear financial targets that support the broad objectives for the business are crucial. A budget that sets revenue targets, monitors costs, and aims for a certain level of profitability is key to reaching financial goals. Budgeting allows you to track your expenditure and income, analyzes the business, and allows you to make better financial decisions. Almost every employee can make an impact on budget. By our actions or by promoting products, we can either increase or decrease sales, influence expenses, and therefore impact the financial results. Each budget should include the following 4 features. The more detailed information you have, the more accurate your budget will be. Firstly, predict your earnings. How much money you expect to generate, also known as incoming money, in a set period of time, monthly and annual basis. For established businesses, use historical data. How much in sales did you achieve at the same time last year? For new businesses, use a break-even point, market analysis, and industry average expectations for similar types of business. Secondly, calculate your expenses, also known as outgoing money. How much money you expect to spend to produce goods or services. Calculate both fixed and variable costs. For example, if you expect to sell 100 loaves of bread each day, how much supplies and ingredients will you need to make 100 loaves? Calculate labor expenses. How many staff will you need? Multiply these by number of shifts or days or months you are setting your budget for. You can research industry average costs to support your calculations. And do you have a business loan? If so, you need to include the interest into your expenditure. Make sure you cover all of the expenses in your budget. The rule of thumb is to add 10 to 15% on top of your calculated expenses. The third step. Once you have all of this data, you can set clear financial targets and develop a plan to achieve them. Having clear goals will keep you motivated and keep you on track. And the 4th step is to review, define, and communicate your goals to your team. Having shared goals and having buy-in from your team will contribute to the budget success. If your business has several revenue streams like a bar and accommodation, then you need to have one combined budget and a budget for each of these areas. For smaller businesses like cafes, it would mainly include predicting your sales, but it's important to break down and calculate information like average spend per person. Take into account the difference of sales between the weekend and versus midweek, peak and off-peak periods, and include any events that may impact the business positively or negatively. You may not be experienced in all areas of the business. However, by surrounding yourself with a strong professional team, you increase your chances to succeed. If you're looking for a business intelligence tool to help you prepare accurate budgets, my tip is to have a chat with your accountant. It's your turn now to prepare a budget considering the 4 features. Start by predicting your earnings, followed by calculating your expenses. With this information, set yourself a financial goal and schedule a day in your calendar to review your goal. Download the budget template attached to this lesson. Here are the 3 notes to remember when it comes to developing budgets. Budgeting allows you to track your expenditure and income, analyze business, and make better financial decisions. To prepare a budget, predict your earnings and calculate your expenses. And the more detail, the better. And set clear financial targets that will be reviewed and communicated to the team.